Charlie, I'll come to you first, and I guess this is what we call a Babrinskoy trading day.
I was going to say you should take a picture of your screen because I hope we're going to have a lot of days like this for the next couple of years. Higher rates, more inflation, a strong economy is very good for value stocks and not so good for growth stocks. And it helps that those value stocks were trading very cheap relative to those growth stocks with a historic gap in their price-earnings ratio. So we think when the bonds start to return to their historic norms, none of this negative real interest rate stuff, when we get back to real interest rates, it's going to be very good for value stocks, not so good for growth.
Just to keep tugging on this thread, Lindsay, I mean, is this a rotation that is afoot again? Just how sustainable is this?
Yeah, I mean, we've seen all year there's been rotations in and out of growth, into value and cyclical. So I think we're starting to see that again with the start of September, oddly enough, as investors got pretty nervous and braced for the worst, which may have came last week, and the market still ended in positive territory at the end of last week after last Monday's scare with Evergrande. But I tend to agree with Charlie. I think now we're in a phase where we're returning to the value and cyclical sectors. You saw that. I know we'll talk about energy a little bit later, but you saw that with energy leading, the financials are performing well again after a pullback, and the reopening trade seems to be back on. So I think as Delta cases start to rescind, you're going to continue to see this risk-on trade take place.
Charlie, I can see the argument for why some of your stocks will relatively outperform if the themes of the last week continue to play out. But we have seen quite a sudden move higher in yields over the last week or so. If that continues and if the Fed has to announce faster tightening than previously expected by the market, will that not derail all of the market and mean sort of absolute declines even if you have relative outperformance?
No, I don't think so. It's a great question, but I don't think so. I think that if you have the key is a strong economy. If we continue to get the kind of earnings beats that we've had from our industrial and financials, with 88% of companies beating estimates, then we can absolutely have good absolute and relative performance in value stocks. I mean, it helps to start from the 9 times earnings that Borg Warner is trading at. It helps if you're at Goldman Sachs at 11 times earnings. So you absolutely can have stocks go up if earnings continue to increase. And let's face it, there are a lot of financials where the earnings are going to go up if we have normal interest rates.